Just a wow morning, Kay, with the market action of the year to date. And then this morning, off the back of a massive payrolls report, Anastasia, you said it, 3 silver linings. I imagine the data this morning backs that up.
Well, it certainly does. And John, I think I said it last time on Payrolls Friday that it was a soft landing type of a report. And this is yet again a soft landing type of a report because we're seeing phenomenal job creation. We're seeing job openings that are still at 11 million. And as a result, these layoffs are not resulting in higher unemployment numbers. So as long as consumers are gainfully employed, that's going to prop up the economy. And I guess the other silver lining is that the wage inflation, 4.4%, a little bit higher than expected in last month year over year, but it's still sort of holding in this 4% range. So that's the silver lining, John. But I do worry that this challenges the view that Fed Chair said just a couple of days ago, which is that disinflation has started and it's soon going to start in the services part of the economy. I think it challenges that view because if you have 11 million jobs out there and people are going to find jobs, that still creates some wage pressure. And 4% year-over-year wage growth is just not good enough for the Fed. So near term, I completely understand the market reaction, and frankly, we've come up a lot in a short period of time, so I'm not surprised to see this give back.
We've had a year of gains for investors, a year of gains in a month. Anastasia, it's what now? What now?
Well, what now? I do think that at this very moment, we are due for some sort of pullback and consolidation because, if you asked me 2 or 3 weeks ago, I would have said, well, we're not yet at technically overstretched levels. And, maybe this market has more room to run, but we are approaching overbought levels certainly on tech and on other parts of the market. And the risk that I think these markets may need to appreciate is there's a risk that with the part of inflation that it has in fact been transitory is the goods inflation, the supply chain bottlenecks. It seems like it took longer to transition, but it seems like it is transitioning away. And that's why the headline inflation is falling as food, fuel, and durable goods prices are falling. But there is a risk that I don't think market participants are really focused on, that maybe there's a secular inflation narrative that is more sticky, and that is wages. If we do continue to see the strength in the labor market, and wages don't go down to 2%, maybe they stay at 4%, that's a problem. And we may end up in a position where, especially as China reopens, and that puts pressure on, the goods sector, inflation again, especially via energy, and then we still have this sticky services inflation, then maybe we're not, in fact, on the path to 2%. So that's the risk that I worry about, that the markets sort of need to price in near term. So the view is, yes, there are silver linings. Yes, there's reasons to be more constructive on stocks this year, but it's really difficult to see us go above 4,200 until we convincingly get rid of inflation.